Hello, my name is Dick Jones. I'm the tax problem guy. You know, I've solved tax problems for a living for a lot of years, for about 26 of them, and I thoroughly enjoy what I do. I enjoy going to bat for people, representing them, so at the end of the time they can sleep at night and not have to worry about the IRS. I had a lady in today that said that we set up a payment arrangement on, and she says, you know, just to have the stress of this off of me is worth $1 million. Obviously, I didn't charge her that. Been nice if I could have. But anyway, we got the stress off of her, and she was able to sleep at night. You know, one thing I get asked a lot is, especially in this day and age where you've got a lot of divorces and remarries and whatever, is if one of the partners has a tax liability and I marry that person, does that tax liability become mine? Well, the answer is no. The tax liability stays with the person that has the tax liability. Now, there's some extenuating circumstances that obviously you have to watch out for. If you buy a house together, then you own half the house and the spouse with the problem owns half the house. So if you've got a free and clear house, let's say you pay cash for it, then half of that house is free and clear, but the other half is not. It's got a tax liability on it through the tax lien, which is at the courthouse. If you go to do an offer in compromise, they take the person's income that is not liable and use that to see what portion of the allotted liabilities or expenditures in the household go to that tax person that does have a liability as opposed to the one that does not. So there's some things that you have to do. If you file a tax return, you need to file and have a refund coming, and you have the spouse has a tax liability. You need to file what they call an injured spouse, so you will get your portion of the refund back, and even though they will keep the portion of the injured spouses or your partner's that has a tax liability, to keep that money in some instances. So it gets a little convoluted, but the general answer to the question is no, you are not responsible for your spouse's tax liability. If it came with a new marriage or if it came after you were married. Let's say I have a tax return that hasn't been filed for, let's say 5 years. They didn't bother to file tax returns and they've been married for 10. Well, in the case that I'm thinking about, which I just took on, husband has a business and hasn't filed payroll taxes and income taxes. So there's a problem. Wife works for wages, just like you and me do, and had withholding coming out of her check, and she hadn't filed either because he hadn't filed. Well, obviously he's got a tax liability that he's going to have to deal with. So what we did was we went back and we filed all of her income taxes that were due, and she's going to get her refund back. But we filed them separate from the spouse. You don't always have to file a joint return when one of the spouses has a tax liability. They can file a separate return. So always remember that, because most people, when they have a tax liability and they go to somebody to get that prepared, let's file a joint return, it's cheaper. Again, you might want to plan, and if there's a tax liability involved, you might want to look at married filing separately as opposed to married filing jointly. If you have other questions about how to file when your spouse has a tax issue, call me at 573-341-5578, or if you have tax problems and need some help, call me at the same number. Thank you.